are SMEs and professional firms of medium size. EFAA is a member of the Association of CRAS and SMEs, SMEunited, and a founding member of the European Financial Reporting Advisory Group, EFRAG. And we are a member of Edinburgh Group. We have a very good relationship with other professional accounting organizations around the world, IFAD or others. Small and medium-sized accounting practices, SMEs, are European SMEs' most important business advisors because we have a very close personalized cooperation and mutual trust. For me, the most important is that we provide services to millions of SMEs and sales employees around the Europe. From EFAA, with our principal focus is in Europe, we are doing a lot of things. For example, if you visit our web page or our social media, you can see now EFAA COVID-19 position statement. You can see our important guidelines for SMEs, our digital competency maturity. We are working very, very hard or too hard about digitalizations. You can see our newsletter, events, articles, our important positions, papers, and common letter for our profession, our expert group, and more. Of course, we have very good relation, and a very good meeting with different members of the European Commission and European Parliament. We are working for our professions. I think that our role, focusing on SMEs through the SMEs, is more important. EFAA, as the competent regional accounting organization in Europe, focusing only on SMEs and SME matters. And between these services, advice about finance is one of them. For those reasons, today we are putting the focus on it. In our first webinar, we are putting the focus in finance. Of course, we will have other webinars with other subjects, but today for us is very important the liquidity for our SMEs. Please welcome Gerhard, our keynote guest speaker, and welcome to Paul Thompson, our EFAA director and moderator in this webinar. Thank you so much for your participation. Gerhard and Paul have a vast CV and experience. You can visit your LinkedIn and you can check that they have a very high quality and very high experience. For those reasons, I am sure that their presentation will be good for all who are attending. We have received a lot of questions, but I am sure that Gerhard and Paul will answer this question. Please, Gerhard, you take the floor.
Thank you, President. Welcome to everybody. On behalf of SMEunited, I just have to start my presentation. No, it doesn't work. Here. So now I'm there. Okay, here. What I would like to do today is in my introduction for the discussion to touch two different topics. This first topic is which kind of financial instruments are available for SMEs at the European level. And the second part, how they are implemented and distributed and how SMEs can reach out to them. So let's start with the classical financial instruments, which many of us know. It's the COSME program, competitiveness for SMEs, InnoFin, which is the financial instrument as part of the Horizon 2020 program. And also since 2015, we have the European Fund for Strategic Investments, the famous Juncker plan, which has a specific SME window. And all these three programs together have provided guarantees to SME loans in the amount of 13 billion guarantee volume. And with this money, loans for about 850,000 SMEs have been distributed since 2015. Everything of them is in the framework of the current multi-annual financial framework. In addition to them, now as the first measure is a crisis response, the European Commission has mobilized another 1 billion budget, which can be transferred into 8 billion guarantees for SMEs. There is a call out since 6th of April, which gives not only guarantees to classical investment loans, but also to working capital loans. Unfortunately, this call is already oversold. The contracts will be signed 1st of June, the second batch of 1st of July. But what we hear from the European Investment Fund, that the money is already gone. So we have to work further to get additional money available for SMEs. And there are two programs in the pipeline. The first is the European COVID Guarantee Fund from the European Investment Bank, which should have a volume of 25 billion euro, transferring into 200 billion of guarantees. A large part of them should be used for SMEs, but there is still a discussion if it's only for SMEs or also for larger companies. The discussion is going on between the finance ministers and the board of the European Investment Bank. Implemented should it be via the European Investment Fund or via national promotional banks. Also, this discussion is still ongoing, but the finance ministers are quite optimistic that they will find a solution till the 1st of June, allowing them to have the first calls as soon as possible. The second part, which is a little bit more long-lasting for the autumn, is that you may know that the European Commission will present next week its recovery fund, which should, in addition to the multi-annual financial framework, be available also from the autumn on to help companies and governments and consumers to get out of the crisis. This recovery fund should include a so-called solvency support program. This solvency support program will be part of the European Fund for Strategic Investments and later then of the European InvestEU program. And the idea of this 16 billion guarantees should be helping SMEs to recapitalize, mainly in form of subordinated loans and hybrid capital. Because what we have seen now is that for the first period of the crisis, it's important to ensure liquidity. It's important to give them loans to survive the crisis. But after the crisis, when it's about restarting and recovery, it's very important also to give them money, to get also money in their balance sheets and to recapitalize them. Otherwise, they will be in overdebt and also on risk to get insolvent, etc. So then, in addition to them, there are also European money which is distributed at national level via the so-called cohesion and regional development funds. The European social funds, altogether it's called at European level European Structural and Investment Fund. These are money where this is distributed by the regions. The regions decide what happens with this money. But there is also a possibility to use this money for financial instruments at national level, either to give it to the European Investment Fund to distribute them via the normal channels, I come later to this point, or give the money to national promotional banks or national guarantee schemes, which also then can offer SME financial instruments. Not all member states have used this. I think it's about half of them. The other half is not using this instrument. Now, in the Corona Response Investment Initiative, the European Commission or the European institutions allowing the regions to use this money much more flexible than in the past. There's no need for co-financing anymore, and they added 37 billion additional money, which was the leftover in these funds, and instead of giving the money back to the finance ministers, they are now allowed to spend this money directly for Corona response measures. So, and a very important aspect in all this financial instruments debate is because financial instruments, if they are coming with public guarantee, if they're coming with subsidized loans, this is also state aid, yeah? And therefore the European Commission has adopted a temporary framework for state aid, which allows member states to be more flexible as regards which kind of aid is allowed to provide to companies and to SMEs. This includes, in the first thing, grants up to 800,000 euro, which can be combined with the 200,000 euros from the de minimis regulation. This means up to 1 million can be given to SMEs in form from grants to help them to finance fixed costs, etc., etc. The second thing is there's also an extension of the framework of as regards guarantees and subsidized loans, where member states can provide guarantees for loans to a loan amount the double of the annual wage bill or 25% of the total turnover. Then it's a possibility to, or liquidity for the next 18 months needed by the company. And also important, it can be used for working capital, not only for medium-term financing, and it can go up to 100% of guarantee of a loan. In normal times, it's only allowed 80% of a loan can be guaranteed by public structures. So this was the first round of the framework, and last week, also already in the view of the solvency fund, in view of the need of SMEs need more capital, this was amended that also now recapitalization via subordinated loans or hybrid equity is allowed, and this part of the framework ends only end of next year, while the classical loan guarantee and grant framework ends in December 2020 this year. However, there are already negotiations ongoing that the Commission may extend also the general framework, so the first 3 bullet points, to at least mid of next year, maybe even till the end of next year. This is still under discussion and will not be decided before summer. Okay, but next to these measures which have a direct impact on SME financial instruments, there are also measures which have an indirect impact. There is the traditional global loan facility of the European Investment Bank, where the European Investment Bank provides liquidity to banks which are short of liquidity to provide loans to SMEs. So this helps banks. Then the European Central Bank has announced the Pandemic Emergency Purchase Program, 750 billion. With this program, they can buy national government bonds, allowing member states to get access to cheap money on the capital market to place their bonds without too much spreads, and makes it easier for them to finance their crisis measures. Then the European Banking Authority has done some supervisory measures, which makes it for banks easier or less costly to lend to SMEs. For example, the treatment of non-performing loans has been eased. The treatment of financial assets in the bank balance sheets, if they are the asset price is going down, they don't have to be reevaluated immediately, etc., etc. And the European Commission also has announced that the fiscal rules are flexibilized, and also they have applied the general escape clause for the Stability and Growth Pact. That means there are no limitations anymore as regards 3% of GDP, 80% of or 60% of the total debt of GDP, etc., etc. So these rules are not applied for the moment, but will come back, of course, afterwards. And as a recent measure, which is still under discussion, is a change in the banking regulation, the so-called quick fixes, which includes an increase of the SME supporting factor. SME supporting factor means that it becomes cheaper for banks to lend to SMEs because they have to hold less money against SME loans than they would have to do in normal cases. And additionally to them, there are also measures where the European Union gives direct budget support to member states. On the one side, the SURE program, which will start on 1st of June, 100 billion loans are available to finance national temporary working schemes or income support for self-employed. Also, from the beginning of June, we will have a specific credit line from the European Stability Mechanism, which provides up to 240 billion loans, maximum 2% of GDP per country, long-term loans with very low interest rates, also to help member states to finance crisis measures. And now in the pipeline, we have the reform support program, which should become part of the recovery fund. At the moment, in the Commission draft, they have 200 billion loans for member states in, but there's the discussion, as you may have heard the last 2 days, the proposal from Germany and France, that it should not be loans, that should be even grants to hand out to governments. And also part of this recovery fund at the moment is 50 billion additional grants, which can be handed out via the cohesion fund. So this is what we have at the moment. And now the big question is how this can be used to help SMEs. So the first thing is important to understand how the money is distributed. The general way, this is true for more than 90% of all this money I have talked about for SMEs, financial instruments. The money goes from the European Commission as a budget guarantee to the European Investment Fund. This is true for EFSI, for InvestEU, it will be true for the Solvency Fund, etc., etc. Or it comes from the European Investment Bank and goes also via the European Investment Fund. And this investment fund is managing the channels. And we use this since the first financial instrument available at European level. This was the multi-annual program, MAP, which was coming to force in 2005. So this is a very well-established system of providing guarantees to loan guarantees and finance to SMEs. So the European Investment Fund has this money, and with this money, he gives guarantees to national or regional intermediaries, which can be national guarantee schemes, which can be promotional banks, or even direct to banks and guarantee SME loan portfolios in banks. These guarantee schemes at national level, be it the KfW or the Bavarian Guarantee Bank, be it the institutions in Belgium or in Austria or in Italy, they get from the European Investment Fund a counter guarantee, which amounts between 50 and 80%. And this guarantee institution is then able to provide guarantees to a bank. So this national institution intermediary gives a guarantee to the bank to support, instead of a normal collateral from the SME, guarantees the loan. It makes it less risky and cheaper for a bank to hand out loans to SMEs. Now in the crisis, these guarantees can even go up to 100%. In normal times, as I said before, it is maximum 80%. So this is the channel which works. And now let's have a look from the SME side how it works. An SME in most of the cases, there are some exemptions where they can go directly to a promotional bank, but in most of the cases, the bank, the SME has to go to a bank, to the house bank, and apply for a loan. And then the bank will check and handle the loan, will make sure that all the regulatory requirements of the bank regulation are fulfilled. And then if the bank decides to ask for a guarantee, the bank applies for the guarantee to the national intermediary. And the national intermediary has to check if the application is in line with the support scheme, what was handed out by the Commission or by the government or by the European, on the criteria handed over by the European Investment Fund. And then if the bank gets this guarantee, then the bank can hand out the loan to the SME. That's the way. It's a little bit it sounds a little bit complicated, but it is an established system which works in most of the countries quite well since many years, but unfortunately not in all countries. And we are working together with the European Investment Fund and the Commission also to improve the situation in those countries where it doesn't work or where the government has not set up intermediaries which can profit from this scheme. So, and the last slide I want to show you is the most important information where you can find this, how this works in detail and what is available. There's in one side a web page from the European Investment Fund, which lists for each member state and also for other countries which have access to these instruments, like the economic area, like Turkey, etc., lists the intermediaries which distribute this money at national level. You will find their national guarantee institutions, you will find promotional banks, you will find national and regional commercial banks, depends on the country's structures, etc., etc. So here on this, behind this link, you find for your country who has a contract with the European Investment Fund to distribute European financial instruments. And the second important information is the DG competition of the European Commission. Here you can find all schemes which has been approved by the European Commission based on the temporary framework. Here you find all agreed and approved and adopted support schemes for each member state, which was done in the temporary framework to fight the COVID crisis. So this is what I wanted to put on the table as input for our discussion, and I'm more than happy and willing to answer your questions.
Thank you very much, Gerhard. That was a terrific presentation, and I have to say your presentation has one of the best backdrops that I've witnessed of any webinar I think that we've had during this crisis. I think it's nice and soothing to see that you're in a nice, authentic garden setting.
I was sent out from my cleaning lady, which is in the house.
You must get sent out more often.
It's good.
Okay. Now, in terms of questions, Gerhard, we've received a few questions in advance, and what I propose to do is I will pose those to you first, and then if anybody else has any other questions, they have the option to either put up their hand, in which case you'll see on the center of the screen there'll be a hand. If you tap that, I can unmute you and cue you to ask the question, or you could type the question into the meeting chat, or you could type the question and email it to the secretariat at efa.com, which I'm checking. But let me get started with the priority questions, the questions that were received in advance. And one of the questions that we had was from Annette, who is from the Dutch Institute of Accountants, that's NBA in the Netherlands. And Annette says that many countries are providing loan possibilities for their SMEs during this crisis. The European instruments also appear to be in the form of loans or guarantees. How can we prevent our SMEs to be so heavily indebted after the crisis? Because surely that's going to stifle free enterprise and innovation once we're out of this thing.
Okay, I think I touched it already a little bit in my presentation. I said in the first phase of the crisis, it was important to keep the business running and to help them to have enough liquidity. This was mainly done by financial instruments, by loans, or by, let's say, deferral of payments, of taxes, etc., etc. But all of them leads to more indebtedness in the end of the period or when they want to restart. And therefore, and we are very much aware of this problem. That is the reason why we are now working on the one side with the European Commission on this solvency fund, which should be available in autumn to recapitalize SMEs. We have from DG Competition, we have this new recapitalization framework, which from the state side allows recapitalization. And we are also in discussion with the European Investment Fund and European Investment Bank that part of the money coming from the new guarantee fund from the European Investment Bank should be used for let's say, subordinated loans and similar things which have the quality of own capital in the balance sheet of an SME. So it's absolutely true. This will be the big problem in autumn, not only for airlines but also for SMEs.
Thank you, Gerhard. Okay, another question here is because what we're hearing from certain jurisdictions is from SMEs is a lack of awareness of what is available, but also difficulty in getting at the money because of administrative complexities. I just wonder what your view is as to how easy or difficult it is for SMEs to know about, apply for and obtain financial help using these EU schemes or national schemes for that matter.
Mm-hmm. We will present next week a survey we have done with our national organizations about the situation and how easy it is to have access to bank lending and to financial instruments. And the outcome is very clear here. The number one problem is the complexity and the burden of these programs. Because the situation is the government want to be nice and announce there will be fast help to SMEs to help them through the crisis. The governments give in their communication, they give the impression you just have to wave your hands and then the money will come. The reality is they have to go to the bank. The bank has to check the dossier. The bank has to check if it is in line with their own regulatory requirements. The bank has to link with the scheme provider, with the public agency, have to check if the detailed criteria in the scheme are fulfilled because they are not announced in the newspapers, they are only in the formulas. And then it becomes super complex. Very often applications are rejected because they are not fulfilling all criteria. We have one case in Italy, for example, where for a 25,000 euro short-term loan to survive the crisis, you have to fill 19 pages formulas. 19 pages of a formula. Yeah? That's a horror for an SME, especially for a micro enterprise. Yeah? And what we are doing at the moment, and this is also the theme of a meeting with Dombrovskis next week, our vice president of the Commission, that we try to convince national banks and national SME organization to engage together to make this flow smoother, to get out of the bottlenecks, bring them out of the system because it is too burdensome, it is too slow, etc., etc. So this the best way and the best experience we have in countries where the SME organization, the banking association and the guarantee providers together design the instruments and make it as less complicated as possible. And of course, the task of our national organizations, but also of national of your members, accountants and consultants, business advisors, etc., is here to understand the system and to help them to go through the process. You cannot expect from every hairdresser that he is an expert how this system works. But this is a really an important help which could be provided also from your profession in these cases.
I mean, that's good to hear, Gerhard. In fact, that was going to be my next question, was what is the role for the small and medium-sized practitioner in advising their SME clients? So basically what you're saying is that those SMPs, those small and mid-sized accountancy practices, should be familiarizing themselves with what is available, the different instruments, the different schemes, and they should be perhaps proactively reaching out to their clients and helping them in terms of advising them what's available, advising them what is the best options for them, and talking them through the process of getting the money and using it. So that's good to hear. Yeah.
Exactly. If I would be an SME and I go either to a practitioner or I go to my business organization, to the hotline of a business organization, this is what I would expect from them.
And I think you're quite right. That is what you should get from them. I am aware that there has been some concerns expressed that the SMPs are not doing that as often as they could do. I do hope that they'll step up and offer that advice as and when SMEs are looking for it. I have a few other questions that have popped up just into the meeting chat, Gerhard. So I'm going to be reading those questions out. The first one is from Udo Schwartz. His question is, if the bank takes an additional collateral from the client, do they keep the collateral for them, or do they have to share the warrantor of the 80%? So that's a rather technical question there. I wouldn't dare to try to answer it myself.
No, but my understanding is if the scheme gives a guarantee which is less than 100%, it means part of the risk stays on the banking side. The additional collateral will be used for this. The rest of the risk, which is not covered by a public scheme, guarantee scheme. This would be my understanding, but I'm sure, and we also have these problems, that some banks are using guarantee schemes not to give fresh money to SMEs. They're using guarantee schemes to restructure older or maybe more risky loans they have already in their balance sheets. And this is not helpful. And here we have to work on better monitoring and better enforcing the real rules, because this is not the idea of a scheme for SME finance, that the banks polish up their balance sheets.
Yeah, I guess, these schemes obviously were rolled out in double quick time, and I guess there's all sorts of kinks that need to be ironed out, and the schemes, I imagine, are gradually being improved, refined and fine-tuned so that they operate more efficiently. I have a follow-up question from Annette from the Dutch Institute of Accountants, MBA, and she asks, what will happen with the interest rates for SMEs when the bank has 100% guarantee and the interest rates in the capital markets are already very low?
The normal case is that a guarantee scheme, which provides the 100% guarantee, also sets a maximum level of interest rates, which is a little bit above the Euribor normally. But this is this is regulated. A bank cannot ask for interest rates what they want if they use a guarantee.
Okay. Udo Schwartz did come back to me in answer to your question, the 80% question, and he just indicates that in Austria, some banks think that they have to split the collateral with the warrantor. So maybe the Austrian banks need to be alerted to the fact they're perhaps not implementing it quite the way it was intended.
But this is a little bit the problem I have here with answering so detailed question, because what I have presented is so the usual way it works. But there are, of course, different type of contracts between banks and the national guarantee providers. There are different type of contracts between government finance ministers and the national guarantee providers. And also the European Investment Fund and the national intermediaries, they are normally quite flexible, and they say, we want to help out where need is necessary. So there's not a one-size-fits-all template for these contracts.
Yeah.
And I would not exclude that there is in some cases a split of the collateral between the two sides. It could happen, yeah. Especially if you have, let's say, hybrid products where a part is for the first 3 months is higher guaranteed, and then the guarantee goes back. But whatever it is, everything is possible. Yeah,
no, I appreciate. I mean, Gerhard, we're now a couple of months into this crisis, and some of these schemes, I think, are about sort of 6 to 8 weeks old, and they've been tweaked a little bit to improve them. In your humble opinion, how successful do you think these instruments are operating?
It is a little bit early to say, because what we hear at the moment are many complaints. We hear, of course, everyone, when someone doesn't get a loan, even maybe he wouldn't have get a loan even before the crisis, now say it doesn't work. Also, we hear at the moment a lot from people who have problems. We hear not much from those where the program was successful. Our members have not a very good overview about how much money is already really handed out, but we are working together with the Association of National Guarantee Providers, but also with the Banking Federation to get an overview of, say, how much deferrals of interest payments, moratorias have been done, how much additional money has been handed out to SMEs, how much the total lending volume is increased, etc., to get a little bit of better overview on this. And this also will be an issue at the discussion with Dombrovskis next week.
Yeah, I imagine that's going to be a very interesting conversation you have with Dombrovskis. SMEunited, I know you've been collating an awful lot of information from all the different countries as to the national schemes that are operating. Now, I'm not going to ask you about any of those particular schemes, of course, because you're here to talk about the EU instruments. I mean, there's a huge number of them I can see from the information that you've collated. I just wonder what the view of SMEunited or your own personal view is as to what financial support instruments do you think are missing or lacking, which you think would be highly desirable to better support SMEs? Is there something that is not presently being offered that could be offered?
We have measures which are offered in some countries, but not in all. Because we have this debate now in the public that some countries give so much support that they maybe increase the competitiveness of their economy on the disadvantage of others. Yeah? But what we see is that it is super important that for very small companies, self-employed or micro-enterprises, there is some kind of an income compensation, because they have difficulties to pay for their daily life, for their rents, etc., because they have zero income. Yeah, many have zero income now for 2 months. Huh?
Yeah.
Yeah, this must be a grant. This must be given to them just to survive. Yeah, like unemployed get unemployment benefits, short-term workers get short-term work benefits, but also the self-employed, they get nothing. Yeah? There's a need for them, and that's a huge amount of micro companies and self-employed. The second thing is that for normal companies, it is not enough to give them only liquidity loans. We have to keep in mind, they have to continue to pay the rent, they have to continue to pay back their investments, they have to continue to pay their energy bills, etc., etc. Even they have closed down their restaurant, etc. Yeah? For them, they need some compensation of the fixed costs, because if you give them only a loan, how they should pay back the loan afterwards, because it's not clear that even the recovery, they will not have doubled as much turnover and profit than they had before. Also here, we need some schemes to compensate for the fixed costs. And then what I have said before is in the recovery phase, to make them, allow them to invest again, they need equity in the balance sheet. Otherwise, they will not get the additional loans to finance the next investment steps.
Yeah, I can imagine. And it's, you know, I think at this point in time, it's incumbent upon all businesses and self-employed to exercise very strict financial management. They've got to be looking for ways to cut costs that can be cut and that don't have a serious ongoing long-term implications for the entity. Yeah, so it's obviously a tough time. We're a couple of months into this, and I dare say that there's still a few months to run before there is a significant removal of the lockdown measures. And of course, even then, there are questions being raised as to whether we're going to hit with a second wave of infections. Gerhard, I have no further questions at this point, but what I want to do now is to throw it open to the rest of the participants. If they wish to pose a question orally, then they're quite welcome to do so. They can simply unmute and pose the question, or better still, you can raise your hand using the raise your hand bar in the middle of the screen. So please, if anybody has a question, then you're welcome to ask. And I guess if we don't have any right at the moment, coming back to those schemes that we've talked about, and you've been collating information, as you say, about the national schemes that are available. Would you dare to single any of those out for special credit in terms of what you really like, what they do? Or I can quite understand if you didn't wish to share that. That's obviously a personal reflection.
The problem I have is, even we collect this information, now we have, I think, 70 pages on measures collected in total. From this information, you cannot see directly how good it works or not works. You haven't. Give you one example from my own country in Austria, because this, of course, I follow a little bit more. We have very easy-looking support, income support for self-employed and fixed cost compensations, but there are a lot of rumors around that this takes too long time to go out. People, they have no income the last 3 months. They also have no access to this money, and there's a lot of frustration. But what also is important, in Germany, and I think in other countries too, we have surveys where the companies say, I can survive till end of June. 50% and 80% say I can only survive till end of May. Having this situation, it's also very important for them not only to give them money, but also to give them a perspective when they can go back to business, under which conditions, etc. We have seen a lot of creativity in the SME sector. They have new ideas how to distribute the services, changing the way they provide services, changing the services they offer, changing the production they offer to adapt to the crisis situation. There's a lot of innovation ongoing at the moment, but you only can plan these things if you have at least a certain understanding how the situation develops. And of course, it's difficult to know how the crisis, the health crisis develops, but giving them clear instructions what to do if you can reopen your restaurant, what you have to do when you reopen your hairdresser's location, etc., etc. This is as important for them to get out of this frustration and to get a perspective, a forward-looking motivation. Therefore, you have to be very sensible. And here we have good examples, also from Netherlands, for example, where the different sectors have made kind of protocols on how you go back to business, what you have to take care. Smaller enterprises get help and support to prepare themselves for a reopening or for a kind of reopening and this kind of thing. So here to get in touch with the employees, the business owners, the government, the regulators, to find solutions for the different areas. Yeah? If it's the cinema, the restaurants, etc., etc.
Yeah, and obviously what we're talking about here on this webinar, we're talking about SME access to finance. What is available? How do they get it? If they should need it? And obviously there are many other schemes that have been implemented at EU level, but more particularly at national level, to help SMEs ride through this storm, and perhaps help SMEs to the extent that they don't have to look for money, that they don't have to look for loans. So I guess I have another question there. I mean, of all the different, I'm not talking about finance instruments here, I'm talking about the support schemes that have been made available for SMEs across Europe. Which types of schemes are you thinking are proving the most effective to keep these SMEs afloat?
I am not sure if I fully understood what you mean is which kind of support schemes. You mean advisory services or?
I'm thinking, for example, furlough schemes where staff are being paid effectively by the government and not by the entity itself.
I don't know. But
quite,
course,
no, I quite understand.
No, wait. There's one, of course, what I always have mentioned it shortly before, which is super important, is this possibility to send your staff to short-term work schemes. Because this means the employees have more certainty, also a little bit more income than if they become unemployed. But you can keep the people in your company. You can decide on a flexible way, take 10% of the workforce, take of the time, or take a 20 or 30, and the money you have invested in the qualification of these people are not lost because they may then go for another job after the crisis.
Yeah, I mean, that sounds, critical, doesn't it? Is that SMEs, as far as possible, retain their employees, their staff in some shape or form, rather than lay them off and permanently make them redundant. That's obviously going to be critical.
Another example is, for example, that to the closing of the shops in the non-food sector, many SMEs started trying to start online selling. And here there are very good support offers available from business organizations to helping, or from IT providers to helping them to get started with online selling, because it's also not easy for someone who has no experience with them to say, now it's start to do it. It takes a lot of consideration behind about payment systems, etc., about delivery services, etc., and this kind of stuff.
Yeah, I mean, I think that's a very good point. Clearly, what this crisis has done is has accelerated the digitalization of businesses. So, for example, I think a lot of businesses are suddenly offering now online ordering and delivery and pickup, whereas before it was just people walking through the door. In fact, just yesterday I went to have my first cafe latte from my local coffee shop for 2 months. It tasted good. And you know, they had obviously spent a bit of time setting up an online system, and the shop isn't open as such except for the front door, and you place your order at the front door or online using your mobile phone. Does SMEunited have any information on where does one look for help? An SME that is looking for help, as you just said, in terms of implementing online delivery or online ordering, is there any obvious sources that they can go to for help?
Not at European level, so this may differ from member state to member state. What we see is that on financial problems, in normal times, I have no new figures from the crisis, but in normal times, what we see is that the two main let's say, support SMEs go either to the bank themselves or they go to their tax advisor or accountant to get support on financial stuff. If it's about regulatory problems, they are going normally rather to the business organizations. And but as I said, I have no new figures now for the crisis period.
Yeah, I can appreciate. We have in the chat box, there's been a couple of statements made by Dominic Bach from KfW, which sounds like it's the Austrian or German bank. Dominic, if you wish to make your statement, please go ahead. Otherwise, I can do that for you.
Well, there's not much of a statement to make. Thank you very much. There was a question from Annette to which I answered, for example, where we have a program where the interest rate is currently 3%. It's a program where we take 100% of the risk. So that was simply directed at Annette. And I gave her also the conditions. And then for an overview of national measures on the crisis, and quite a few of the measures obviously target SMEs specifically, LT, NEFI and AECM have jointly compiled measures in the last weeks or months by now, and the document by now has over 100 pages. So I also posted the link to that if you wish to have a deeper look into it. It's sorted by member state, so it makes it a little bit easier, I guess.
Thanks. That's really appreciated, Dominic. And I guess if we're struggling to sleep one evening, we've got a 100-page document that we can wade through, and it might help. No, there's obviously so much going on, and things are changing. It's a very fluid situation. Day by day, the schemes are being introduced, modified, withdrawn. It's very hard for the likes of SMEunited, I'm sure, to stay on top of all what's going on. But I know that Gerhard, you and the team are doing a fantastic job of keeping abreast of the situation. And I know you're doing an awful lot in terms of lobbying the influences in the Brussels bubble community and making sure that they don't forget about their SMEs, because the SMEs are very much the bedrock for the European economy and society. And, once we're out of this thing, it's going to be the SMEs that will innovate and grow the European economy. So we need to do our very best to protect and preserve them right now. I don't have any further questions, and we're coming up to the top of the hour, as we say. So my proposal would be that I just now take a few minutes to close off the presentation. To thank you once again, Gerhard, for being with us today. It's been very informative, I'm sure, for all of those on, as well as myself. And we will obviously be in touch with you on a regular basis, as and when new schemes become available, and we can disseminate that information using our social media and our electronic newsletter. Sarah, I wonder whether you could just flick me up the last slide for today's presentation. All I wanted to say was that there we go, we're getting there. If we can just go to, that's the one. Just to remind everybody that's online that the European Federation of Accountants and Auditors for SME represents small and medium-sized practices across Europe, but we see ourselves as the big voice for SMPs in Europe. And we do our very best to ensure that those SMPs are most able to protect, preserve and assist SME clients in particular. And I think at this time it's worth noting that we are all in this together, and the SMEs and their SMPs, we stand to be better and stronger working together in partnership. I want to just remind you, the final slide that I have is that EFA has a comprehensive response to the COVID-19 crisis. It comprises a statement, which is just a single page on our website. So not the 100 pages, Dominic, that you were threatening with us earlier. But in addition to that, we do have guidance for small and medium-sized practices. And that is constantly updated on every 6 or 7 days. Sarah and myself update the free resources that are hosted on this page, guidance for SMPs. Included on that page is a section for advisory, and many SMEs should find that information useful to them. The advisory materials that we have signposted are for use by small and medium practices talking to their SME clients, but can also be used by the SME themselves directly. So that concludes what I wanted to say. I'm not sure, Salvador, whether you wanted to wave us all goodbye, but that's all from me over here presently in New York. I think you need to unmute Salvador.
Sorry, thank you, Paul. Thank you very much, Gerhard, and thank you very much, Paul, for our interpretation moderation. For us, it's very important, this webinar. This is our first webinar. We will continue with the webinar in the future. And we think that the liquidity is very important for our SMEs. Of course, I was reading the different questions. And normally the national guarantee is at the first request. For example, in Spain, 80% the guarantee. The national bank cover this guarantee. The others, the additional guarantee only cover 20% for SMEs. For that reason, now I think it's important to continue with this activity, with the webinar, to provide support for our SMEs. Thank you very much for our activity. Thank you very much, Paul. Thank you very much, Gerhard. And thank you very much, the rest of the participants. And I will see you soon. Okay?
Thanks for inviting me.
Bye.